What's going on, everybody? It's Jeff here. Welcome back to the channel. In this video, we're going to be talking about AMC stock. I made a video on Sunday saying that my price target for Friday was 14 bucks. All right. I had also talked about how I believe the stock was going to come out of the gate on Monday, due to a couple of reasons. One also being what happened after hours, the last 3 minutes on Friday. There was some good volume and some really good buys in there, bringing the price up from 11.16 to 11.34. We closed at over 14 bucks on Monday. I expected the stock to be 14 bucks on Friday, and we already hit it on Monday. It was almost a 26% gain. Today it is pulling back. It pulled back about 10%. We're going to talk about where I see the stock going for the rest of the week, and I also want to bring up what is expected to happen for this March 19th, as well as the DTCC regulation rule change. Okay, we're going to go over that as well, so stick around. You're not going to want to miss this. For those of you that are new to the channel, hit that thumbs up button. Truly appreciate it. Subscribe to the channel. End up joining the journey. If you're interested in joining our private community, it's the first link down below in the description. There's over 250 members. We talk stocks all day long. I have my portfolio over there. I also give some good stock picks, as I have a bunch of people that help me out be able to find great stocks that are prone to move quickly soon. So if you're interested, guys, it's the first link in the description. Let's get into the video. First off, guys, this is a little article by Seeking Alpha. AMC pulls back 10% after a big Monday gain. This is very normal. It jumped about 26%. Okay, yesterday, it's very apparent for there to be profit taking and nothing to be worried about. GameStop is even down even farther at 17%. Express and Cost was down as well. I had mentioned in my last live stream that I did, I'm doing live streams every day now. So if you're interested, pay attention. Those are going to come around somewhere around lunchtime, 12 to 1 Eastern Standard Time. But I talked about this week was going to be rocky. Okay, the Fed is having another meeting. It was a 2-day meeting. Tomorrow, Chairman Jerome Powell is expected to speak. They talk about the release of the new economic and interest rates forecast, which could show Fed officials expected to raise rates by 2023. This isn't news to us. You know, the Fed had said that they wanted to keep rates low until the economy fully recovered, and they had talked about halfway through 2022 for the rates to rise. So it shouldn't be a shocker to us, as I feel like investors should know that. However, the odds are high the Fed will move markets this week, no matter how hard it tries not to. Okay, Powell is unlikely to be specific how he normally is, but what he says could rock the already volatile bond market, and in turn could drive stocks. It could particularly hit growth stocks if bond yields begin to rise again. We saw that happening last month, guys, as the bond yields were continuing to rise. The growth stocks got hit the hardest. Growth stocks valuation is really dependent upon future revenue. Okay, so they're the ones that get hit the hardest because they're normally overvalued to begin with. All right. Also, like I did point out, guys, is that the Treasury yields are continuing to rise slightly ahead of the meeting. We'll see. It's a 2-day meeting, so we'll see exactly what happens tomorrow. I want to point this out before we get into AMC, guys. There's no question that Fed officials will upgrade their economic projections compared to their last stab in December, when they expected a growth of 4.2%. Their new expectations and projections are going to be big depending on how the market moves. Goldman Sachs is one of the most bullish. It has an expecting output to increase by 8% in 2021. If the Fed can see the growth to be higher than 4.2%, that's going to be a very, very positive catalyst, okay, for the market overall. Let's get into AMC. We'll talk a little bit about where I think this stock is going to be going, and we're getting into the charts as well, guys. So first off, this is the Fintel. Again, I'm still seeing a huge amount of short shares available, as well as a very, very short borrow fee rate. This doesn't match up, considering that individuals are continuing to hold this stock. There's much more buying pressure than selling pressure. This does not really continue to hold up. Also, Trades goes through a phenomenal video explaining why this does not add up as well. So like I said, I always take these tools under a grain of salt, because like I said, they have different motives, and they gather their information from other points. We'll bring up pre-timing, still also showing. I talk about this in many of my videos. If you're new to this channel, guys, This is a website that has a stock forecast of where it feels like the stock is going to be moving. I don't look at this in any other aspect of saying that the stock could hit $20, $22. I look at this as a supply and demand, meaning that more people are buying and holding the stock, which leads me to believe that obviously this is a good for the stock's movement. Like I said, these have been wrong as I've looked at them, so please don't utilize this too heavily. But like I said, one key factor it tells me is that the stocks are being held, okay, and there's more buying pressure. If you also look at barchart.com, I go through this absolutely all the time. AMC, much more high. Options volume is higher today, which is good, and still about a 2-to-1 call ratio, a little over 2-to-1 call ratio, which is good. Very bullish for AMC stock. So I also want to bring up, guys, I talked about the DTCC rule change. Okay, this was filed, if it shows right here, on the 5th. We went over a little bit. Okay, let me just dive into this because it's a bunch of different pages. But basically, what the NSCC is proposing to enhance its management of the liquidity risks that arise in or are borne by it by calculating and collecting, when applicable, SLD on each business day rather than only in advance, okay, of the options expiration activity periods, which is very good, especially for these synthetic shares that are out there, okay, and the naked shorting and these short share percentages, the floats that are way over 100%. So this is very, very beneficial news for all of us that are holding the stock. This went through on the 5th, okay? This was filed and proposed on the 5th, okay? And a lot of people talked about March 19th, which is also quadruple witching, which would happen. This gets put into effect 10 business days after the filing. However, if anybody objects to this or any rebuttals on this, then it can get delayed. In my expectations, this is going to get, delayed. All of these hedge funds are going to try as hard as they can to be able to file these rebuttals, okay, or have their brokers, market makers, or any official they can to file these rebuttals to be able to delay this in the process. It could be delayed up to 60 days. All right, what is key is this will most likely occur before the May 4th shareholder meeting, which is very, very good news for us. Okay, so be patient. If that does not happen right away, it does not get into effect on the 10 days after, on the 19th. Okay, the 19th will still be a very high volume day. I've been around for many of these quadruple witchings. They happen 4 times. Okay, a year, and basically it is an increase in volume on all stocks. Okay, so this will be good news for us. Like I said, because we've needed AMC to continue to reach its volume. So let's take a look at the charts, guys. Okay, and then I'll give you my price target where I see this ending up. So if you look at this chart right here, it shows the 15 EMA, and it's been riding along it ever since. It's been above it, and it just got pushed up a little bit high, and it's pulled back, but it's still maintaining support around that mark. Let me zoom in a little bit. Maintaining support around that mark, which is really good sign for us. If you look at this back over, we will go to the 10-day chart. It is continuing to rise and so forth, and it continues to pull back just like it did. We really haven't found, I guess, a too strong of a new support. If we look at this on the 5-day chart, even really closely in, it hasn't pulled back enough. We go on the 1-day, 1-minute chart. I said in my last video it looked like $10 with that new support. It completely broke up. Look at that high of $14.88, and it's looking right here to see around that $12.50 support has some. And we're going to continue to test that as it goes. It needs to stay above this 180 moving average. Okay, and this is on the 1-day, 1-minute chart. So as far as my price prediction, guys, I can continue to see the stock to rise a very little bit. It's going to be held back because of a little bit of volume decrease, as well as what's going on with the Fed. Investors are very much in their nerves because of what's going to be happening for the outlying of the future. The market has been on an insane bull run, especially these high growth and tech sectors, so you can expect a lot of volatility and a shift. I'm going to maintain that $14 close for Friday, even though we hit, as I showed in the last screen, it hit a high of $14.88 pre-market. I'm going to maintain that $14 for the rest of the week, and we will expect to see a lot of volume coming on Friday. So guys, leave a comment down below. Let me know where you think this is going to go. That's it for this video, guys. I'll see you in the next one.